Ever wondered how you could invest like Warren Buffett, even if you're starting with just $1,000? Today we're diving deep into exactly that. We'll explore two giants in their fields, companies that the Oracle of Omaha himself has invested in. One is a global behemoth that has changed how we shop and consume entertainment with a cloud computing arm that's basically printing money. The other is a titan in financial services, synonymous with premium service and a loyal customer base. These aren't high-risk penny stocks. These are established leaders with strong future prospects. We're going to break down why these stocks are in his portfolio and how you can get a piece of the action. If you appreciate this kind of breakdown, demolish that like button. It helps the channel more than you know. Share the video, leave your thoughts in the comments, and subscribe to the channel for more financial updates. Let's get into it. First up, let's talk about Amazon, ticker symbol AMZN. Amazon is the undisputed global leader in e-commerce, revolutionizing retail with its vast product range and fast shipping. This dominance is the result of relentless innovation and investment in logistics. But Amazon is more than just an online store. A huge part of their business is Amazon Web Services, AWS, their cloud computing division. AWS provides the backbone for countless websites and businesses boasting high profit margins. So why would Buffett invest in a tech giant like Amazon? Amazon has several durable competitive advantages or moats. Its brand recognition is unparalleled, and its logistics network is incredibly difficult to replicate. AWS has a significant first-mover advantage and a sticky customer base. Amazon's customer-centric approach aligns with Buffett's preference for businesses that prioritize long-term customer satisfaction. The company is constantly innovating, looking for new ways to serve its customers. Thanks to fractional shares, you can invest in Amazon with just $1,000. E-commerce and cloud computing are both growing globally, and Amazon is well-positioned to capture a large share of that growth. AWS continues to expand its services and global reach. Amazon is constantly experimenting with new ventures like healthcare and satellite internet. While not all of these will be home runs, the potential for future growth is always there. Of course, no investment is without risk. Amazon faces competition, regulatory scrutiny, and the challenges of managing a massive organization. However, Buffett and his team believe the company's strengths outweigh these risks. Amazon's market dominance in North American e-commerce is staggering. The Prime membership program creates a loyal customer base that is more likely to shop exclusively on Amazon. AWS offers a vast suite of services, making it a one-stop shop for many businesses. The international growth story for Amazon's e-commerce segment still has a long runway. Amazon's advertising business is becoming a substantial revenue generator. The company's ability to generate significant free cash flow is another attractive feature. This cash can be reinvested into the business or returned to shareholders. When you look at Buffett's investment criteria, strong brand, competitive moat, good management, and growth potential, Amazon ticks a lot of those boxes. The leadership, even post-Bezos, is still focused on long-term innovation and operational excellence. Investing in Amazon is a bet on the continued growth of e-commerce, the indispensable nature of cloud computing, and the company's ability to innovate. The network effect is incredibly powerful for Amazon. More buyers attract more sellers, which in turn offers more selection, attracting even more buyers. Think about the data Amazon collects. This data can be used to personalize shopping experiences and optimize their advertising platform. Even with its current size, Amazon continues to find avenues for growth. The expansion into physical retail with Amazon Go and Whole Foods shows their willingness to experiment. The investment in electric delivery vehicles and other sustainability initiatives shows a forward-thinking approach. So, when you consider all these factors, the e-commerce dominance, the AWS powerhouse, the advertising growth, the Prime ecosystem, the constant innovation, and the strong leadership, it becomes clearer why AMZN is in Berkshire Hathaway's portfolio. It's a quality company with multiple growth levers. Amazon continues to dominate as one of the largest companies in the world, boasting a massive market capitalization of $2.13 trillion. Its revenue reached a staggering $637.96 billion, reflecting the relentless expansion of its e-commerce empire and cloud computing powerhouse, AWS. The company posted a solid net income of $59.25 billion, showcasing strong profitability despite ongoing global economic challenges. With earnings per share sitting at $6.28 and a price-to-earnings ratio of 32, Amazon remains a growth stock favored by investors betting on continued innovation and market leadership. For an investor with $1,000, gaining exposure to a company like this means participating in a business that is shaping the future of commerce and technology. It's about owning a piece of a truly transformative enterprise. The key, as with any Buffett-style investment, is to think long-term. Don't get caught up in short-term price fluctuations. Focus on the underlying business fundamentals and its ability to generate value over many years. Amazon has demonstrated that capability time and time again. The company's ability to innovate within its premium niche is also important. They are constantly refreshing their card products, adding new benefits, and enhancing their digital platforms to meet the evolving needs of their discerning customer base. This keeps the offerings fresh and competitive. When you look at the financial performance, Amazon has consistently delivered strong results, with solid revenue growth and healthy profit margins. This financial strength allows them to invest in growth initiatives and return capital to shareholders, a combination that appeals to long-term investors like Buffett. Next up, let's talk about American Express, ticker symbol AXP. American Express isn't just another credit card company. They operate a closed-loop network capturing more value from each transaction. The Amex brand is synonymous with premium service, exclusivity, and trust. They appeal to affluent consumers and business clients willing to pay for perks and superior customer service. This focus on the premium segment is a key differentiator. Think about the iconic charge cards, the green, gold, platinum, and Centurion Black card. These products are status symbols and lifestyle enablers. Buffett loves businesses with strong pricing power, and American Express has demonstrated this ability. They can charge higher merchant discount rates because their cardholders spend more per transaction. Customer loyalty is another huge factor. Amex cardholders are famously loyal, often sticking with the brand for many years. This loyalty is fostered through excellent customer service and attractive rewards programs. The company's business model is highly resilient. While sensitive to economic cycles, its focus on high credit quality customers means lower default rates. American Express is also a major player in the corporate payment space. This B2B segment offers significant growth opportunities. Like Amazon, American Express benefits from a powerful network effect. The more cardholders Amex has, the more attractive it becomes for merchants to accept Amex cards. Warren Buffett's Berkshire Hathaway has been a major shareholder in American Express for decades. This long-term commitment speaks volumes about Buffett's confidence in the company's enduring competitive advantages. The shift towards digital payments benefits all payment networks, including American Express. They are continually investing in their digital capabilities. American Express has been working to attract millennials and Gen Z consumers with new products and partnerships. The travel and entertainment sector is historically a stronghold for American Express. While impacted by the pandemic, the recovery in travel has boosted their volumes. Investing in AXP with $1,000 is feasible through fractional shares. This allows you to own a piece of a blue-chip financial services leader. Consider their data analytics capabilities. By operating a closed-loop network, Amex has access to valuable spending data. This data can be used to personalize offers and manage risk. The company has been returning significant capital to shareholders through dividends and share buybacks. Buffett is a big fan of share buybacks when a company's stock is trading at a reasonable price. While competition in the payment space is fierce, American Express's unique brand positioning provides insulation. Their partnerships with airlines and hotel chains extend their reach. The global presence of American Express offers potential for international growth. Trust is paramount in financial services, and American Express has built a reputation for security and reliability. The company's ability to innovate within its premium niche is also important. They are constantly refreshing their card products and enhancing their digital platforms. When you look at the financial performance, American Express has consistently delivered strong results. This financial strength allows them to invest in growth initiatives and return capital to shareholders. The management team, led by Stephen Squeri, is highly regarded. Buffett often emphasizes the importance of capable and trustworthy management. With a market cap of $199.82 billion, the company reported a 2024 revenue of $74.20 billion, supported by a loyal customer base and continued consumer spending. Net income came in at $10.13 billion, reflecting the strength of its premium card offerings and merchant services. Its earnings per share stood at $14.28, while the price-to-earnings ratio held at a relatively modest 19.97, suggesting solid value for long-term shareholders. On top of that, American Express rewarded investors with a dividend yield of 1.02%, making it an attractive pick for those seeking both growth and income. So, for an investor looking to follow Buffett's principles, American Express represents a company with a powerful brand, a loyal customer base, and a strong track record of financial performance. It's a quality business that has stood the test of time. Investing in AXP is a bet on the enduring value of a premium brand and the continued growth in global electronic payments. The moat around American Express is built on its brand, its closed-loop network, and its focus on a specific, valuable customer segment. These are durable advantages that have allowed it to thrive for decades. The company's ability to innovate within its premium niche is also important. They are constantly refreshing their card products, adding new benefits, and enhancing their digital platforms to meet the evolving needs of their discerning customer base. This keeps the offerings fresh and competitive. When you look at the financial performance, American Express has consistently delivered strong results, with solid revenue growth and healthy profit margins. So there you have it, two incredible companies, Amazon and American Express, both significant holdings in Warren Buffett's Berkshire Hathaway portfolio, and both accessible to you even if you're starting with $1,000, thanks to fractional shares. These businesses showcase the kind of quality, durable competitive advantages, and long-term growth potential that the Oracle of Omaha looks for. Remember, investing like Buffett isn't about timing the market, it's about buying wonderful companies at fair prices and holding them for the long haul. If you're serious about taking your investing knowledge to the next level, check out our Value Stocks Investing Master Course. Building wealth through investing is a marathon, not a sprint, and focusing on quality businesses is a cornerstone of that journey. Join the Stocks Galore Patreon for exclusive stock tips, in-depth analysis, and real-time trade alerts. Let me know your thoughts in the comments section below. I love reading your perspectives and insights. If you found this video helpful, smash that like button, share it with your friends, and subscribe to the channel for more financial wisdom and stock analysis. See you in the next one.